Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage trades. If you're in the market looking to refinance or purchase, you might like to see this video and follow. These videos are on what's impacting mortgage rates on a daily basis, whether if it's something along the lines of headline news or something in the economic calendar, or sometimes geopolitical, or even sometimes bad news is good news, or vice versa for investors. So the sentiment kind of changes. We're here to kind of give you the backside story of what's impacting these mortgage rates that you may not get in if you follow the media. So, without a little bit about myself is I am a loan officer. I do work with the national lender. We can lend in all 50 states. So if you guys got questions about anything, whether it's mortgage programs that are available or rates or whatnot, please feel free to reach out. We love to earn your business. So if you're looking to refinance or purchase, please reach out. We'd love to show you what we can do to help you guys obtain what you're looking for. Without further ado, we'll jump right into the market report. We'll start off with the economic calendar. Every Thursday, we get the jobless claims, so people applying for first-time benefits. Uh, the previous report, last week's report, was revised slightly higher from 290,000 to 291,000. Forecast is supposed to remain unchanged at 290,000 for this week. However, it did dip down lower to 281,000. So the good news is that we saw about 3 weeks in a row now that we were under 300,000 in terms of people applying for unemployment on a weekly basis. So this is obviously good news that less people are applying. Now, as if you've followed me, I have said before that those people are quitting or being fired for not taking the vaccinations. These people won't be applying, won't be on these numbers here. So these numbers can, in some ways, be misleading. So the biggest thing we'll need to do is when we get the Bureau of Labor Statistics, see the labor participation rate, see how much that might spike up, to see how much of an impact that might be. We don't know for certain, but we do see headline news of some places where they're firing as much as 1,000 people to a couple hundred people here and there. So that all adds up. And of course, those are just the headline news. There's others that are not. So again, let's proceed with what we have here. Continuing claims has dropped, which is good news. Less people are remaining on the unemployment rate. And here's the big one for this. One of the big ones for this week is the GDP for Q3. This initial reading, our final reading, will be in December. So the previous quarter back in Q2 was at 6.7. Forecast was supposed to dip down to 2.7. However, it came in at 2%. So uh, actually, it's not that bad, primarily because some investors or a lot of people are coming out with that. They were thinking it might be much less than 2.7, like closer to zero. We gave like 0.2%. So this came in probably a little bit better. Investors are okay with this because it came in better than they expected. But again, we'll wait and see what the November and December numbers will look like, as this could easily change. Now, lastly, we'll get the pending home sales index for the month of September. So, in August, it was revised slightly lower down to from 119 and a half, 19,500 seasonally adjusted home units to 119,400. Uh, it came down all the way down to 116.7 thousand. That's a two. Basically gives us a point two, or I'm sorry, 2.3% drop from month over month on there. Now we did have the 7-year note auction. It did create some volatility in the market. It did come in it kind of disappointed the markets. We'll touch on that here in just a second. So headline news, basically, investors are still looking at Q3 earnings reports. They are working towards a spending bill in Congress. It look like it could be down to about that 3.5 could be down to about $2 trillion in there. We'll have to see if that goes through. See if they have enough votes to get that through. They've been having some difficult times trying to get it through. Um, and that's really about it for that part. We got some, like I said, this week will be pretty big. They got a lot of big guys coming out like Amazon, and I think like Microsoft's already released, but Amazon is out, I think tonight afterwards, and another big company, maybe Alphabet, might be coming out. So let's take a quick look here at the mortgage-backed securities. As you can see here, we're down 6 basis points. We were down further, like 11. We started the day off a little bit. So we're pretty much from where we started from, unchanged, but we were down much earlier. Some lenders had priced in worse pricing from yesterday's close. Then we got, we were up, hitting this 25-day moving average, and investors came in with better pricing. So the pricing was pretty close to what we were seeing, unchanged from yesterday's close. But now we're kind of on the verge of maybe a reprice for the worse again. I'll show you the volatility, what happened here. So early on, we had this big change here. This was from Christine Lagarde's testimony from ECB. The bonds, they were selling off the European bonds. The European bonds were kind of dragging the U.S. bonds down along with it. Basically, she was talking about something what we've been talking about, tapering. So she's probably they're going to wrap up by March is when they're figuring she's going to be buying less, and then basically finish up by March for their what they call their PEP program, which is the equivalent of our QE program here. So then they start, once the New York Stock Exchange opened, we kind of worked our way upwards. We were doing pretty well. And then the 7-year Treasury came in, and we started working our way downwards. They were kind of a little disappointed about what kind of rates they were getting for the 7-year Treasuries. So again, unfortunately, that one kind of disappointed the markets and brought us down lower. We were almost unchanged levels, like around up 2 basis points, and then it brought us down lower on that. So day is still young, so we'll have to wait and see if that will be the final mark. And then, of course, here, as you can see here, this 25-day moving average seems to become a big thing here. As yesterday we touched off it, today we touched off it, and haven't been able to break above it. Here, same thing. We started lower on the yields and brought one upwards. We're up against this technical level. We're just at about 1.57 right now. Where yesterday we were at about 153, I believe it was. 15. Yeah, I believe yesterday we were about 1.153, 1.54 range here. So, again, we'll have to keep an eye on this 25-day moving average. We did bring this back to 25-day moving average, but it could be kind of a tough ceiling for us, and hopefully we can get above it. Next week, of course, we got the Fed meeting, and they're expected to announce tapering. That could hamper mortgage rates. Mortgage rates that could put us kind of back into the hole again. So be cautious going ahead. May want to plan accordingly. So that's pretty much the wrap on that. Last but not least, we'll touch on the mortgage rate. So national average for 30-year is 3.18, and the 15-year is showing 2.57 right now. So these do include points. Usually go on eighths of a percent. So that's why you kind of see not an eighth percentage on these. These kind of get points wrapped into it. Again, these are just mortgage averages on a national level for conforming limits here. All right, folks, I hope this is useful for you guys. If you guys got questions about anything, please reach out. We are here to help you guys out in any capacity. If you guys like these videos, please smash that like button and follow. We greatly appreciate you supporting the channel. Thanks so much for viewing, and we'll look forward to see you guys in tomorrow's video. Tomorrow will be the big day. We get the PCE number, which is the Fed's favorite gauge for inflation, and that will be our big cornerstone data for this week. All right, have a great rest of your day. Bye-bye.